This video is going to share a Keltner Channel trading strategy. On the screen here, I have Apple, and you can see that I have a daily chart. This is the Thinkorswim trading platform, and this is the daily chart. So each one of these price candles represents 1 day of price activity for Apple. You can see I also have a Keltner Channel displayed on the screen, and it's set to the default settings. So this middle line here is a 20-period simple moving average, and the upper Keltner Channel is set to 1.5 ATRs away from this middle line here, and the lower Keltner line is set to 1.5 ATRs below it. The trading strategy requires two elements. It requires rules for the entry and rules for the exit. Since this is on a daily chart, this strategy will be a swing trading strategy. So it will be meant to be a trade that is held for a matter of days rather than something that's held for a matter of minutes or hours. So let's start with the entry criteria for the trade. The entry criteria is very simple. It is if the price bar of any given days goes through the upper Keltner line, then the entry will be at the middle line thereafter. So for example, here you can see the price of Apple went up through this line, this upper line. So at this point, we can just wait for the price to get back to the blue line, and that would be an entry signal for this trading strategy. So you can see here, obviously it doesn't go down to the blue line until it comes over here. And at this point, that's an entry signal because it went through the upper line. And once it's gone through the upper line, the entry is the first time it hits the blue line, the midline thereafter. And that's the entry. You can see it occurs again over here. It comes up, it hits that upper line. Now we're just waiting for it to hit the blue line. And there it is. Again, it comes up, it hits that upper line, comes down, it hits the blue line. This is another entry right here. In terms of the exit, we're going to have 3 different possible ways that the trade could be exited. We're going to have a profit target, a stop loss, and a time limit. And whichever is the first of those 3 to occur, that will cause the trade to exit for this Keltner Channel trading strategy. So let's start first with the profit target. We're going to set the profit target to be 1 ATR away. So you can see here I have the ATR indicator. ATR stands for average true range. This is just one way to set up a profit target. There are many ways you can set up a profit target. For this one, I'm going with the ATR indicator. So you take the ATR value at the time that the price reaches that midline, at the time that the entry signal is shown. And in this case, you can see, if you watch this number here, as I mouse over the day when the entry signal occurs, the ATR is 2.8. So you take the entry price, you add $2.80 in this case, and that would be your profit target. And you can see here, if you look at the Keltner Channel here, this number, this blue number, represents the value of the blue line as I mouse over these different candles. The blue line here is $160.23. So if you add 280 to that, it comes up to $163.03. So for this example right here, that would be where you set the profit target. For the stop loss, we'll do the same but in reverse. We'll set it to 1 ATR below the entry. And so we would take $160.23, subtract $2.80, and that would be our stop loss down here. And the last thing, the time limit, will allow 1 week for the trade. So after 1 week, if the profit target has not been reached and if the stop loss has not been reached, then we'll manually close the trade. That's the setup for this trading strategy. You can see here that for this first example, within 1 day, it came up and reached the profit target. The entry was 160.23 and the exit was 163.03. And so within 1 day, it reached that profit target. Down here with this entry, the entry, if you watch this number up here, could have been 163.98, and the price went down at first. If you check the ATR of this entry, it's 275. So that means the stop loss would have been 161.23. And if you look here, the low of this did not hit the stop loss. And by the next day, the price went up high enough. Let's see exactly what the profit target would have been at 163.98 plus 275. That's 166.73. And you can see here, my mouse is right around 166.73. And this day, it would have hit the profit target. So that's how the trade is set up. There's one important thing to be aware of, is that for any given price candle, as it's unfolding, in other words, in the middle of the day when the price is still moving on any given candle, this blue bar, this blue line, is also moving. And so you don't know exactly where that blue line is going to be at the end of the day. There are at least a couple of ways to handle that. One is you can just wait until it hits the blue line midday, wherever that is, knowing that at the end of the day, the blue line might shift a little bit based on whatever the outcome is of the day's price activity. It will still likely be near the finished blue line value at the end of the day. So you can it's more of an estimate that way, not knowing exactly where the blue line will be at the end of the day, but knowing it likely will be in that general vicinity. That's one way to handle it. Another way is you can project where that blue line is going to be by looking at, say, the prior 2 days of the blue line and just estimating where it's going to be based on those. So, if you know this one is 159.34 and this is 159.86, that's about 50 cents difference. You could estimate the next day might be 160.36 as an example. The entry doesn't need to be so precise that you need to be concerned about pennies when it comes to swing trading. So you can just estimate if you want. Now, in this video so far, I've shown you examples of how this trading strategy works, and the examples are all profitable ones. And that's great, but we want to caution you against thinking that that's enough information to suggest this is a foolproof trading strategy. There are definitely going to be times when this trading strategy loses as well. And for any given trading strategy, it's really hard to tell whether it's good or not without looking at data and historical information. And at Stock Market Guides, that's what our specialty is. We look at the past. We look at all the historical information we have available to us and determine what works and what doesn't, at least historically. As part of that research, we've definitely done a lot of studies about the Keltner Channel and about which trading strategies might perform well. And we do something called back tests, which is we take a given trading strategy and we simulate that strategy through the entire history of the stock's price activity. And we've done it for every stock that there is. And by doing that, we've identified which settings to use for the Keltner Channel and which exact strategies to use that have strong performance in back tests. We've also determined which stocks that this strategy works best with. That's part of the service that we offer at Stock Market Guides, and you are welcome to subscribe and get access to those trading strategies and to trade alerts for those strategies. For now, though, you do now have a Keltner Channel trading strategy that you can consider. If you have any questions about Keltner channels or about trading stocks or options in general, you can reach out to us anytime. Our email address is support@stockmarketguides.com.